Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5-cent Savings Bank, and subject to risk, may lose value. Webster 5-cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
You're on.
Good afternoon, ladies and gentlemen. This is the Long Hill Report, Conversations with Mike Carnevale. I'm your host, Richard Morkel. Things are going on in Washington every day. It seems like we're going to tariff somebody, maybe we're not going to tariff somebody. Last month, you were not unhappy with the Trump administration. I was a little more skeptical.
Mm-hmm.
So how are we feeling about himself now?
Well, I think I've done a complete 180.
Again?
No. From initially saying, this has the potential to really be. I don't think he's going to accomplish anything. You take a look at all the things that were talked about, all the problems that were there, that this was going to be solved day one, first 90 days, and...
Wait a minute. He's cutting us out of, like he said on day one, he was going to get us out of the Ukraine situation.
Yes.
Oh, he hasn't. Oh, that's
Right.
right. I'm sorry.
He was going to solve the Gaza situation.
Yeah.
Got a great relationship with Putin.
Well, a few days ago he said Putin's crazy, and then the last thing he said was, "I had a phone conversation. Great guy."
Yeah.
So this is, I'm not defending him,
Yeah.
but who remembers he said crazy, and
Yeah.
who's going to remember he said great guy?
Nobody.
So I think about Trump as a broken field runner. Every day he's breaking a new tackle, and he's moving up the field, and then he's breaking a new tackle. Will he come crashing down? My feeling of the matter is we'll know how successful was at the midterms.
Right.
If he can get a majority in the midterms, enough people are still behind him because they're fanatics. Enough people think things are getting better.
Mm-hmm. Well, today it's him versus Musk. All day today.
But he said Musk's a great guy. We had a wonderful relationship.
Yep. Then he said today on Truth Social, very disappointed in Elon. I really helped him a lot. Elon on X comes back and saying, hey, Donald, you would have lost the election if it wasn't for me. Trump comes back. This is about a week after he got the key to the White House in the Oval Office. Something's going on. But it's like, a lot of people were saying, oh, this is really bad. He's going to ruin. I'm starting to think he's probably going to accomplish nothing. A lot of talk, a lot of executive orders, which can all be flipped with the next, whoever the next a president is. You know, I mean, great sound bites, but I don't know if, and maybe he doesn't have that long an attention span. I don't know, but I'm less and less concerned, kind of by the reason that his effect on the stock market is less and less. You know, before it was, oh my God, we're going to increase the tariffs to 150% and market down 1,000 points. Now when he says, oh, we're going from 25 on steel and aluminum to 50, the market goes down a couple of hundred, then by the end of the day, it's back to even or maybe down a little bit. So,
question. Could that be interpreted, and I'm not interpreting it as this, as a good thing, that the stock market ignoring the day-to-day?
oh, I think it is.
So,
Yeah.
in the end, okay.
Yeah, I think it's like, you know, the boy who cried wolf. Yeah, he's talking crazy again. Yeah, he'll change his mind within a day, and people see that. Yeah, you know, one day it's a 50%. You know, then I'm such a nice guy. I'm going to give whatever country you want to name a break and not impose them for 30 more days. It's like, you know, I mean, I don't understand it myself. You know, well, you know, that's him being him, or politics. I'm not so sure. I think it might just be the type of person with a short attention span, or the need to grab every headline of every minute of every day. I don't know, but looking at the stock market and its effect on that, it's having a less and less effect. Meaning, I think, you know, the institutions are discounting him more and more. Like, yeah, he's all talk. As opposed to, yeah, he's somebody who could turn this into something we don't want.
Well, you mentioned the rule by what do you call it, the executive orders.
Mm-hmm.
Biden was insane with executive order.
Mm-hmm.
I've always looked at executive orders suspiciously that it's sort of like in imperial countries where they had rule by decree. The emperor says this.
Mm-hmm.
Now, well, you know, I'm always wondering, you know, the president has a right to run the country his way within the rule of law.
Mm-hmm.
But at what level does he get a right to make an executive order? So one day there's a tariff on Lower Slovenia. The next day on Mauritania. The next day they take off the one on, or they change the amount for Lower Slovenia.
Mm-hmm.
You don't remember Al Cap, Little Abner?
Yeah.
There was the country
Yes.
Lower Slovenia.
Yeah.
Anyway,
Yeah.
so yeah, it confuses me. But it may. I think I told you the tariff that supposedly started the Depression, Smoot-Hawley.
Mm-hmm.
I always thought that a fellow named Jude Wininsky made a great case that did cause it.
Mm-hmm.
But I've read since then there are a lot of other ingredients that went in. Maybe he knows what he's doing. I'm not convinced, and I'll watch the midterms.
Right.
And that's it.
Yeah, I agree. I think that will tell you whether he knows what he's doing or not. But I mean, you know, the opposition was all up in arms with Elon Musk, and now, you know.
What I don't get about Trump, and we'll get to this, it's later on in the, is inflation. Is it steady? Is anything really happening on that?
It's actually, the rate is actually continuing to go down. You know, it's in the,
You see, that's Powell's. I think Powell does what Wall Street wants. He doesn't really do what he doesn't really probably care what Trump wants.
well, you know, a lot of people say Powell does it. You know, it's sort of like, well, Powell doesn't do anything. It's the members of the open market
But
committee
you have to
who are-
admit he has quite a hefty call there.
He does, but he's only one vote out of, what is it, 10 or 12? 12. So I think, you know, yeah, he's the spokesperson, but he's not
Well,
setting
let's just
the...
say let's just not say him. Say the Fed as an institution, all the member banks and all that, all the governors and all that.
Right.
Do they want it steady?
They do. I mean, well, their
yeah.
policy states that that's what they. I mean, they want employment to
Was-
be well and prices to be moderate.
Okay, but we're at 2.3% for the past year.
Right.
That's not the 2% target. So we
No.
continue to see the dollar get worse.
Correct. Just
So-
at a slower pace.
Well, 2% would be still getting worse, but at the targeted
Right.
level.
Right. But that's down from 9 plus a year or so ago, or longer than a year now. I'd say 2 years ago. So it's, I mean, it's moving in the right direction.
I'm getting my cheerleader costume on.
Yeah.
No, I mean, but, okay, but can this go on forever? We've had this discussion. We don't have to have it anymore.
Right. Well, the answer is it can't, but you don't know when the end would be.
No, and having a moderate increase, it's not like, well, Weimar Germany, when a
Right.
billion, you know, it's spoiling the frog.
Right.
Okay. All right, let's get to where you want to. May.
May historically is not a great month. Wasn't the case this month. It did very well. You know, historically May is not a good month, but in recent years, you know, as I said, the past 10 or 15 years, May has been a good month, and it was again this year. You know, Dow gained over about 1,600 points, which was about almost 4%. Closed back over 42,000. Now we got to remember the all-time high was like around 45, so we're within 10% of an all-time high. So, you know, and we entered the weakest 6 months of the year for stock prices. So May was a pretty good month overall.
So as they say, sell in May and go away, come back on Halloween Day.
Right.
Okay, would you say that was a dumb thing to do, sell in May this year?
Oh yes.
Okay,
Yeah.
so we can scratch.
That's a historic thing.
Next year it'll come back.
You know, but you know, recent history that has not bared out. And again, that's like one component. You don't want to hang your hat. You don't want to make any decision on one item, right? Because then you're either right or wrong. You want to kind of blend a lot of these together to again, sort of find the middle area. So you're not going to extremes all the time. I see a lot of people who, I don't know, they just go to extremes. Oh, I'm in, I'm all in, or I'm all out. Oops, I should have been all in, so I'll get back on. These are just one items. These are things where you'd say, oh, geez, yeah, so if the market didn't do well, yeah, well, I can see why. That was one of the indicators that said it wouldn't. But there are others that, you know, temper that. So, you know, yeah, I wouldn't hang my hat on any one particular thing. But that is one indicator that, you know, historically has worked out. But again, historically, you're talking a long time, a number of years, right?
Yes.
You know, a lot of these people say, oh, you know, see my investment, it was here and then it went up there, and they just see the beginning to the end. But what they don't see is what happened in between, right? So, and that's all that is. I mean, interest rates went up a bit. Actually, the 30-year went over 5% briefly, but is now back down. The short-term rates have not really budged at all, still, hanging around 4.25%. So that's interesting. Yield curve has been positive for a while now. That would indicate, at least historically, no risk of any type of a recession in the short term. And we're into June now, and June essentially is about historically bad as May is historically, but the last negative odd year for stocks was 2015. So it's been, been 10 years since 2015 was the last odd year where the Dow went down in June. So again, I would be looking certainly not like the gains we saw in May, and we'll see that because the technical indicators have really shifted, but I also would not be looking at a big drop in June.
You went out on a limb there, Guy, and I'm proud of you.
Okay.
Okay?
Yeah, somebody is at least.
All right. If you want to talk about the technicals.
Well, I think as we know, technicals kind of show short-term trends. So if I told you the Dow was up 1,600 points in the last 4 weeks, or 4%, do you think the technical indicators look better or worse? We're talking short-term indicators, these are. And as expected, you would expect they look worse. And they do. When you get a big rally, the number of New York Stock Exchange listed companies that move up increases. So that's a negative, right? Mm-hmm. And it did. What happens when stock prices go up? People are less fearful. So the volatility goes down. And that's what happened. The short-term oscillator, that kind of tracks short-term movement. Well, if you looked at a chart for the month of May, it's ever increasing. So you would expect that oscillator would also be high. And it has. It really went up. It was at 38 a month ago, which is the lower end of fair value. Fair value is 20, a reading of 20 to 80. So it was 38 a month ago. Today it's 70. So we went from, in this rally, we went from a market that was on the low end of fair value to now on the high end of fair value. Well, that makes sense because the market had a big run. Fear and greed index, another good example. Not much greed a month ago, a lot of greed today. 36 indicator a month ago, 62, which is in the mid-range of greed. The index goes from 52 to 70. We can talk about how they come up with those numbers, but you see if the range is 52 to 75 and you're at 62, you're kind of in the middle of the greed category, well in the middle of the greed category. So again, the technical indicators, would tell you, hey, we had a big move, not likely to have another big move like that, but not anything that would say, woo, these things are so to such an extreme level that, the market's really going to drop.
So you're thinking June will get
I think
through
June will
this?
be an okay month. It'll be a positive month, I think.
Not an explosive month.
No. And of course, these technical indicators are just what they are. They're mathematical formulas. They don't take into consideration anything political. Peace breaks out all over the world, and that's not going to be picked up by these technical indicators. Again, they're one component to look at.
Okay.
It's like the weather forecast, right? They were telling you it was going to be 90 today. So if it's 90, you're not shocked, because it kind of hinted that it would be. If it was 0 today and they were predicting 90, you'd be shocked. And that's how these things are. It's pretty simple.
I don't think 0. I mean, I could say a 50-degree,
Right.
but I don't think 0 is going to happen.
No.
I
Well,
mean, I hate to go out on a limb.
probably not. Although we did have a couple of days in the last week where it was in the low 40s.
See, that's true, but today and yesterday have been.
Oh, yeah.
I'm exporting vitamin D.
Yes.
I got so much.
You got so much of it, yeah. I agree.
All right. No change in the Fed, and they're blaming. Are they? I shouldn't say blame. It's this unsure. Your narrative says unsure about tariff.
Right. I think that makes sense. I mean, nobody really knows. I mean, from one day to the next, what, you know.
Yeah, don't you think the guys who got all these PhDs, kept going to school, got all these degrees, should be able to know if a big 140,000% tariff on.
You would think so, but no.
So we're going now. We're leaving because I mean this is all just no.
Yeah.
Okay.
Yeah.
Anyway,
But the futures market, which is where I would look at, you know, what that market is telling is they're going to cut rates in September and then again in December, as of today, what the odds are would favor. So they're going to meet on, I think it's June 17th or 18th, and there's no chance they'll cut then. And then they're going to meet at the end of July, and there's no chance again there. So it's going to be probably in the fall before they cut rates, even though, you know, when we got that weak ADP private job creation number a couple of days ago, you know, the president came right on and said, you know, cut rates now, you know, slowpoke Powell, Europe has cut rates 9 times.
well, you know, I don't want to defend Trump in this, except to say, you guys, get out in front of something.
Yeah.
Cut, increase, or if you're not going to cut, make some really tough pronouncement as to why.
Mm-hmm.
And these, you know.
I think many times,
I mean, this isn't light action what Trump is doing.
no, right. But I think many times it's like, hey, look, hey, Doc, what's wrong with me? Geez, we really don't know yet. Well, no, yeah, I mean, you got to know. Now we ran all the tests, can't find anything. We really don't know. In time, we will know. I think it's the same thing with like the Fed. They really don't know what. I mean, if somebody could tell them what the tariff will be for how long, yeah, then they could make a judgment. But when it's up, down, on, off, how do you make? And Fed is always interested in long-term policy, is what they try to set, not the short-term, supposedly. So, yeah, I mean, I think it's like, I don't know what you want me to say. I don't know. Sometimes that's the answer.
Okay, so, yeah, all right, but this guy's doing not light action. I mean, he's doing big stuff.
Right.
He's hitting. So shouldn't you be able to, okay, so you're doing this 75% tariff on X number of countries, and something's going to happen, and maybe we should either cut or increase.
Yeah, so we cut the rates, and then the next day is, we got a big, beautiful deal with China. We'll cut no more tariffs. Well, that's going to...
Well, maybe you have to, as an institution, say, as long as Trump's out there, we're going to be meeting a lot.
Well, I don't think they want to...
I don't think they want to. Oh, I know they don't want to.
They don't want to go political.
That's not political.
You know.
That's not political.
I mean...
Well, no. I mean, you know, that's responding to something major. How do you say that's political?
Well, you're pinning it to a political person, and they're never going to do that. So that's why they do the way they. That's why they talk the way they do. In other words,
name me one president who hasn't been a political person.
Oh, they all have been.
Your Honor. Your Honor.
But the Fed is not going to
direct the witness.
The Fed is not going to be sucked into that.
It doesn't. I'm not talking about sucking in. I'm talking about responding to an action.
And I also don't think they want to respond to every action. You know, well, we cut rates
I think,
this month. Next month, we're going to raise them. Oops, well, now we'll cut them again. I think that would, in other words, to be flip-flopping every 6 weeks wouldn't, make sense.
ladies and gentlemen, I just want you to notice that Mike Carnevale would be just the regular type of guy on the Federal Reserve. If he ever gets there, he will fit right in. All right.
Moving on to interest
let's
rates.
get to Australia, Bank of England, Mexico, South
Australia, Bank of England, Mexico, South Korea, all cut rates.
Korea, all cut rates.
I don't know if that says anything or not.
Was it a reaction to the Donald and his tariff?
Tariffs, yeah, most
Okay.
likely.
See, they're not afraid. You,
Well,
you and your fellow
They are afraid.
Fed guy.
They are
well,
afraid.
they're not afraid to cut rates.
Right.
Like our wimps.
Yep.
And I'm not saying, okay, I shouldn't say that wimps.
I hear. U.S. lost its AAA rating for Moody's.
To Australia and Finland
Are similar.
similar. Finland is supposed to be the happiest country in the world.
Yes, yeah.
So, you know what?
And they said mainly the budget deficit and the rising costs of the debt is what did it. But the other two agencies had downgraded the U.S. credit, a few years ago. So this is not a big shock. But it is the final of the big three that succumbed to the AAA rating. And now the world has just 11 AAA rated countries. Most of them are Nordic.
Scandinavians,
Yeah.
the Aussies, New Zealand,
Canada's
Germany,
one.
Switzerland. Oil at 61. It's
Yep.
actually in the last several days it's gone up a couple of dollars.
Yep.
I don't like that.
No.
But I haven't seen this when it was down into the 50s, high 50s. I haven't seen that translate to where I like to see it.
Right. Yeah. No. Nope.
Donald, get on this.
Yep.
All right.
Here's an interesting figure: the Trump 100 days.
Yeah.
Market was down 7.9%. That was the worst 100 days since Nixon's second term in 1973. Best one was FDR in 33. We can understand why, right? But surprise, surprise, the second best one was Biden's first 100 days in 2021.
That is kind of a wicked shocker.
Yep. And so it's like, well, how can this be? Because, when I come in on day one, I'm going to do all this and oh, geez, well, it doesn't look like it panned out, at least in the first 100 days. That's not a anti-Trump, pro-Biden statement. That's just what the Dow did in those periods. There were reasons for both results, obviously, but because they weren't similar times. But it's still, I think as great as FDR's return in 1933 was, we wouldn't want that because it was a massive gain
Yes.
off a depression.
There was no. It didn't really go way up, but there was no place it could go.
Could go, right. But I mean, that's just another thing that where, people is like so focused on an idea that sometimes, it doesn't match up to what actually did happen. And the frustrating thing is, the administration could be, planting a tree on the White House lawn in memory of all the people who died. And he'll work in, back in 2020, they stole it, and get over that stuff. It's 5 years ago. You know what I mean? Doesn't matter. Forget about
What
5
are you
years
going
ago.
off with? Who cares about the tree?
Well, no, but I'm just saying that's, in
Okay,
other
so
words.
yeah. All right.
So, but I found that kind of interesting. Everybody touted, it's going to be the glorious 100 days, the best. I know some people who said, I can't wait till the 100 days. Okay, That was the results.
Okay.
Doesn't mean anything about the future. That's
Okay.
just
All right,
a fact.
okay.
That's all.
I'm not going to hurt you over this.
All right.
Can we get on to the lady?
Yes, yes. Inflation's getting better, meaning the rate of increase is dropping. That's good. A lot of these prices are actually falling. I mean, especially at the producer level. Producer prices fell 0.5%. That was the second month in a row they actually
Thank
dropped.
God he planted that tree on the lawn.
Yeah, that's right. And core, which is one the Fed looks at, which takes out the more volatile items, food and energy, was down 0.4%, third straight negative decline. So if you looked at those numbers, let's say you're in a classroom, right? You're taking an economics class, and you're in charge of making a decision on interest rates, and somebody gave you that paragraph on inflation, and they said, what would you do? Would you raise rates or cut rates? You'd probably say, well, I definitely wouldn't cut rates. The rate of inflation is moving in the right direction. So if you're going to cut rates and make money cheaper, you're more likely to stimulate more spending, which could potentially cause inflation to come back. So you probably would do nothing.
Well, as long as prices are going down, why do it? God.
That's kind of the way it looks. Leading economic indicators, we can skip over those. They're bad, and they've been bad for probably 4 or 5 years.
How's employment?
That's doing good. I mean, we still haven't seen layoffs above weekly levels that could hurt the economy, and we haven't seen job creation at lower levels that could also hurt the economy. 52 straight months of non-farm payroll gains. So the employment situation looks pretty good. Unemployment been between 4 and 4.2 for a year.
So I'm not going to say anything because but so we're talking, Trump knows what he's doing. I don't really think so necessarily.
Right.
But I mean, let's people who were willing to shout hosannas with Biden,
Yep.
it's not that much different.
No. And I would say, I don't think he's had any effect either way on any of these numbers. The worst fears have not come to pass.
So we are going to end on that.
Yep.
Ladies and gentlemen, we're happy here. We've had Mike Carnevale for conversations with, and we'll be back next month. This is Richard Moore.